Happy New Year, everyone. It is January 25th, and I hope it's not too late to say that. But I just wanted to give you a brief update on what happened yesterday. So, as of yesterday, the Bank of Canada has decided to leave rates unchanged. It looks as though that we are at the peak, and I think we've known that for a little while now. So, the prime rate right now is 7.2%. So, as of yesterday, they held that. And the talk now is more about when the rates are going to come down. And so I'll run through just a few things here like I have done in the past and give you some tips. And if you need any guidance or need any help or have any questions, as always, please reach out and share this information with anyone that you may know or may need some help. Interest rate cuts are coming, but the Bank of Canada won't say when. Okay, so how this looks here is that inflation has been up and down like a yo-yo. And what's happening here is that basically the rate increases, which we're at the peak now, it looks as though is that it has cooled off inflation, but inflation has been a little bit sticky. And I mean, December was Christmas. So there is more spending and that sort of thing, of course, around the Christmas months. And that's November, December. And then in January, it's a lot of the stuff is cleaning up the debt that we've spent over November and December. So everything is kind of going in line to having rate cuts this year. And I'll go through what's expected here in just a few minutes. But you can see here is that we've heard about rates coming down. Okay, so you can see the trend here is that rates are coming down for fixed rates. And the reason that's happening is that the bond yield or the market is pricing in that rates will come down. So the fixed rates come down and then the variable or the prime rate will eventually come down as well. But this is good. This tells us that the trend is going down. So this is saying that the bond market, how fixed rates are priced, are pricing in lower interest rates in the future. And it could be in the near future. Canada's economic growth has come down. So are we in a recession? Some say we are, some say we're not. If we are in a recession, then what happens is they are forced or, there's a better chance that we'll see lower rates sooner rather than later. Unemployment rate. Unfortunately, we do want this to go up. That's what the Bank of Canada wants to see. And it has gone up over 2023 and it's holding steady at 5.8. So what can we expect moving forward? So this is the forecast, and I'll show you how kind of sticky and volatile this can be. Is that in November, we were looking at economists, this is Edge Realty Analytics, we're pricing in a decrease of up to 0.75% by the end of 2024. January came, and that has now gone to about 1 to 1.25, or 1% in this case. December had priced in 1.25 rate cuts or Bank of Canada prime rate decrease by the end of this year. So where that sits is we're all budgeting in 0.75 to 1%. When does that happen? Now, if you asked me about a month ago, it was going to be as early as March, April. Now, because inflation came in and it's a bit sticky, now the projections are potentially maybe April, May, June. Okay, so that's how sticky this is becoming, but the rates will eventually come down at some point, and that would be relief for variable rate mortgage holders. So if anything is needed, if you're not sure about something, you let me know so we can go through this together. But the goal here is that statistically, in the next couple of years, so 2024 and 2025 are two of the biggest years for mortgage renewals coming in. So we have basically a majority of those people that bought house or renewed back in 2020, 2019. What's happening is their renewals or their rates were down at 2 to 3%, and they're going to bump up to 6 to 7. So in that case there, we have the concern of payment shock. There are things that we can do. This is an article I wrote not too long ago. I'm going to attach it to this email. It's called Panic or Plans. This is basically helping people see through that process. So if you have questions, if you're not sure about something, if anyone else needs help going through the process and they're anxious about renewing their mortgage, reach out, please. The second side of it now is that the real estate market has been pretty stagnant. Now, what happens here is that we are sitting at high rates. Everyone is kind of sitting on their hands for the past couple of years, and they're expecting there's many people sitting on the sidelines. When rates start to fall, I'm already getting people calling me preparing for that. So as rates begin to fall, it's going to stir some more activity in the market. And is that going to drive up prices? We don't know yet, but it certainly could initiate much more activity, maybe get back into multiple offers and that sort of thing. So if you want to plan for that, or you are sitting on the fence and doing something, now is a good time to begin planning for that. Once again, I'll attach this, and please reach out if you want to do any planning. We do run strategy sessions for our clients to make sure that they understand what it all looks like. It's all transparent, so we can make sure that you're up to speed, and just to see what everything looks like, so you can make the best decision moving forward. So please reach out if you need anything, and I hope you're keeping well. And until next time, we will talk to you soon. Take care.